Hey everybody, Derek Gilbert here with Keller Williams Realty. It is January 3rd, 2017. Happy New Year. I don't know about all of you, but I am excited to get back to work and can't wait to make 2017 an amazing year. So I just wanted to start here real quick and just give a quick recap of what we saw over the past year here in 2016, talk a little bit about what I'm expecting coming up here in 2017, and really can't wait to help all you with your real estate needs and really make this a phenomenal year. So let's just jump right into it. So here's the best part of 2016. We saw home values increase in the Denver area about 11.3%. So that's pretty exciting. That's going to be good news for most of you out there. Buyers might be cringing at that a little bit, especially with what I have to say for 2017. But yeah, for all you homeowners out there, you've definitely done well. In fact, if we go all the way back to 2012, take a look at this chart down here. In December of, or actually, let's just go back to 2011. Our median sold home price in December 2011 was $205,000. We ended this year at $345,000. That's a $140,000 difference. That's over a 40% increase in median sold home price in 5 years in the Denver metro area. And I know what all you buyers out there are thinking, well, I'm just going to wait until home values drop. Well, I've got some things to show you here that there's nothing that's showing we're going to see any kind of significant home decrease, home value decline in 2017. In fact, we're probably going to continue to see that go up, as well as interest rates going up. So it's time to make your move or stay out of the market, because you're not going to be able to compete with this if you keep waiting down the road as interest rates go up and we continue to see home values increase. Jumping into some of these other stats, if we take a look at our sold listings last year, in December 2015, our total, if I move this to a 12-month rolling, December 2015, we saw 60,446 sold properties in the entire Denver MLS. This year, we saw 60,520, roughly 100 home difference. We sold almost the exact same amount of homes this year as we did last year. Here's what's interesting too. If we look at our days on market, take a look at this. 2012, our median days on market, 2011, 2012, about 60 days. For the past almost year and a half, we've been less than 10 days. For most of that time, it's been less than a week. So even with the slowdown that we saw this fall, even with home values increasing as much as they have, our days on market has been less than a week. So properties that are selling, they're moving quick. Properties that aren't, they're sticking around out there a little bit. Same thing if we look at our monthly supply of inventory. What this means in real estate terms, if you're not familiar what monthly supply of inventory is, it means if no more homes were listed for sale, how long would it take for all those properties to sell? And a healthy market is about 5 to 6 months of active inventory for sale and monthly supply of homes for sale. We, since 2014, have been less than 2 months supply. Since 2015, about mid-year, we're actually sitting just over a month and a half supply of inventory. So what that comes down to is basic economics of supply and demand. As long as we see the active inventory count as low as it is and this monthly supply of inventory count this low, it is naturally going to keep home prices increasing because it simply can't meet the demand of the people that want to get into the market. So in my opinion, the only thing that would change this, that would cause any significant movement in this part of the market, is going to be interest rates or some other major unforeseen world event. But outside of those things, it would take us probably at least 12 to 24 months to even get halfway to where we need to be as far as a home sale volume goes. So we are a long ways away from that, and that's why I don't see really a lot of changes coming into play here in the realm of monthly supply in 2017 for the Denver market. So it's going to continue to be good news for homeowners. For buyers, it's still going to be a bit of a struggle. But one of the things to keep in mind with this is there's a cutoff point for where we're seeing most of this inventory shortage, as well as low days on market, multiple offers, things like that. And it's about 400,000 and below now. It used to be about 350. I'd say 350 to 400,000 and below. That's where you're going to see the majority of the competition in the market. As we approach spring and even more buyers get into the market, that might start to go up. I mean, I've seen multiple offers over the past 2 years well above 800,000. Last year we were getting multiple offers in the $1.5 million range. So it's all driven by the monthly supply of inventory and how many homes are actually available for sale. Lastly, what I wanted to get into is this active listing count. This kind of feeds into what I was just talking about a minute ago here with the monthly supply. If you take a look at this back out to 2011, 2012, where we saw that 5 to 6 months supply of inventory, that's roughly, let's just call it 20,000 active homes for sale is what we would need to see in the Denver market for us to kind of normalize and balance out. Right now, we're still sitting at about 7,000 homes. So that means we need to add about 13,000 more active properties to the current volume in order for that to, like I said, shift into a more normalized market. I think that would easily take a year to 2 years out. So 2017, 2018, I still think we're looking pretty strong. Jumping outside of the real estate statistics and going into the interest rates, today, this is marketwatch.com. You know, you can use a number of websites. I like MarketWatch just to keep a quick tally on what's going on with interest rates. 30-year fixed right now are at about 4%, 4.1%. 30-year FHA, there is a difference here. FHA rates are typically lower than a standard 30-year fixed rate. FHA is about 3.75, 15-year 3.25, jumbo about 4.5. So what you need to watch here in 2017 is what I'm hearing a lot about is a continuing increase in the interest rate. The Feds just increased the interest rate last month in their December meeting, a quarter point, and I'm hearing that that's going to continue to go on every quarter throughout 2017. So if we're sitting here, call it 4% today, I wouldn't be surprised if we see interest rates hovering around 4.5 to 4.75 by the end of the year. So obviously, we have a new president coming into play. We've got a lot of changes coming into play. So those things can all have an effect on interest rates depending on what happens with the bond market and all of those factors. But let's just say for simplicity's sake, interest rates go up a quarter point every quarter this year when the Feds get together. So 4.75 by the end of the year is probably where I'm expecting to see them. That's what most lenders that I'm talking to are expecting to see as well. So once again, I think we're going to see home values continue to do well this year and increase. I think we're going to see interest rates go up. So once again, buyers, you really need to get into this market. Every 1% increase in interest rate basically offsets your ability to purchase a home by 10%. So if you're buying a $400,000 property, interest rates go up 1%. Basically, that drops your affordability down to about $360,000. So those are real numbers. That's not fluff. That's not some real estate mumbo jumbo. That's the real deal. So definitely give us a call. I'd love to help you out with this stuff. I'd love to walk you through a proper consultation. Home sellers, January through June, this is your selling period. This is the time to get your property on the market. In fact, if we take a look at, and this is one last thing that I want to talk about, if we take a look at sold price and we look at this on a monthly basis, take a look at this right here, June 2015 through September. Take a look at this, June 321, September 303. Let's go back to 2014, June 283, September 270. Let's take a look at this year, 2016, June 360, September 343. This is the pattern that you're going to see every year. June through basically December, the last 6 months of the year, we typically see home values go down. And in 2016, we actually saw the median home value in Denver drop about 5%. So keep that in mind if you're a seller. This is your peak period to be selling is January through June. And buyers, that's a great time for you to start getting into the market as well. So we're going to typically see a lot more inventory coming on the market here after the new year. So once again, give me a call, 720-480-9877, thegilbertgroupco.com. Feel free to jump on there and get complete access to every home on the market. Looking forward to speaking to you here. Have a great 2017.